1 year ago, we challenged our viewers to a stock picking contest. Brian Stoffel and I each created a 5-stock portfolio that we believed would outperform the market in 2022. Our viewers could then challenge us by creating a 5-stock portfolio of their own, and whoever portfolio had the highest returns by the end of the year would win a $1,000 prize. In this video, we're going to review how our portfolios performed and announce the contest winner. Thank you to StockCard.io for not only sponsoring this tournament, but for sponsoring this video.
We'll start with my first stock, which was Unity Software, and at the time, it was a $42 billion company.
Brian, you picked Unity because you thought that it was a play on the metaverse. It had 2 growing revenue streams, and at the time, the financials looked pretty solid. In fact, both you and I were shareholders of Unity, and it scored quite well on both of our investing checklists.
But despite all of that, it was a terrible performer in 2022. The company's Operate solutions faltered. They made an acquisition that was quite expensive, and overall, there was a lot of confidence lost with management. And overall, it returned negative 80% for the year.
Quite a bad start, but my picks don't get any better. So let's go with my first pick, which was Pinterest. At the time, the market cap was about $24 billion.
So Brian, what you loved about this company was that it was founder-led, it was profitable, and especially for a social media company, it was a relatively small market cap stock. At the time, you owned the stock and it scored well on both of our frameworks.
That's right, but this stock underperformed the market in 2022, falling 33%. In fact, this company is no longer founder-led, and growth has really slowed as demand for ads pulled back in 2022.
All right, let's switch to my second stock, which was Sea Limited, a company that at the time was worth $120 billion.
Brian, you really liked that Garena, which is the company's video game division, was paying the bills and funding the company's optionality through Shopee and SeaMoney, and you thought that this company had multiple moats working in its favor. In fact, this is a stock that both of us owned at the time, and it scored quite well on both of our investing frameworks.
That's right, but my confidence was shaken mightily. Garena faltered, and when it did, the company wasn't able to have its moneymaker functioning. It has now shifted towards profitability in Shopee. The problem with that I see is that it won't be able to build out its moat in logistics. Overall, very much like Unity, the stock was down 76% for the year.
All right, let's move on to my second stock, Novocure, ticker symbol NVCR, which at the time was an $8 billion market cap company.
This was definitely a swing for the fence for you. This is a medical device company that treats cancer. What you liked about it was that it's not toxic, it has a large pipeline for potential uses in the future, and it doesn't rival current ways of treating cancer. It's a stock that you owned at the time, scored well on your checklist and pretty well on mine.
That's right, and unfortunately, with a return of negative 8% for the year, this was actually my best pick, outperforming the market by 10 percentage points, although that's nothing to write home about considering this stock lost money.
All right, let's go to my number 3 stock, which is also one of my largest holdings, Mercado Libre. At the beginning of the year, it was a $65 billion company.
Yes, Brian, this is a company that both you and I have owned for years, and it's one of my personal top holdings. You liked that this company had a widening moat, it had tons of optionality, and the stock was down substantially from its 52-week high. And at the time, this company scored very well on both of our investing frameworks.
That's right, Brian, but despite having a tough 2021, the stock continued to have a tough time in 2022, with the stock down 37% for the year. That's bad. It's not as bad as my first 2 picks, but what I will say is that the company itself continues to function well, and I don't see any major problems on the horizon.
All right, let's get to my third stock, which was Zoom Video Communications. At the time, was down substantially from its 52-week high and had market cap of $55 billion.
Now, it's no secret what this company does. You love the fact that it was founder-led, it has stellar financials, and you believe that it would be rebounding from a very tough 2021. It's a stock that both of us owned at the time, and it scored in our highest echelon on both of our frameworks.
And yet, while the stock was down substantially in 2021, in fact, this company peaked in price in late 2020, the stock continued to decline sharply in 2022 and fell 63%. So it was another tough year for Zoom's investors like me.
All right, let's transition to our one bright spot on my side of the scorecard, and that is Axon Enterprises, which was an $11 billion company at the beginning of the year.
Brian, this is a company that both you and I own, and I know that you have been particularly bullish on for years, and I understand why. The company has a great mission statement, it has optionality galore, and it essentially has very limited competition in the areas in which it competes. It also scores quite well on both of our investing frameworks.
That's right, and look at this, Brian, a stock that actually had a positive return for the year. Axon, if you're unfamiliar, makes police stun guns, but also body cameras, and most importantly, the software that lets you analyze those body cameras. This is a must-have, and that showed with the stock's resilience during the year.
Okay, moving on to stock number 4, a small cap from me called Semler Scientific, a company I've followed and owned with great interest for a couple of years now. At the time, it had a very small market cap of $625 million, which enticed me to put it in this portfolio.
That's right. The company has medical devices that look for circulatory problems, and you love the fact that that's a huge opportunity. It also had stellar financials and was showing a high level of growth at the beginning of the year. You owned it and scored very well on your framework, more middle of the road on mine.
And this was yet another bad call on my part because this stock was down 65% in 2022 as the top line growth really came to a screeching halt. The company does remain profitable to this day and does have some optionality embedded in it, but it was a brutal year for shareholders such as myself.
All right, and let's transition to my last pick, which was Airbnb at the beginning of the year. This was a $105 billion company.
Now, Brian, both you and I are intensely familiar with the product. We've both been consumers of it for years, but you love this company. It was mission-driven, it had a wide and enduring moat, and you thought that it was a nice rebound play from the pressure put on the company due to COVID. And this is a stock that you own, I don't, and that is despite the fact that it scores very well on both your framework and mine.
That's right, and I really thought that the company performed quite well during the year. It's generated $3 billion in free cash flow over the last 12 months, and yet the stock is down 50%. Part of that has to do with valuation. The other half just has to do with a lot of pessimism with the macroeconomic climate today.
Let's round it out with my 5th stock, which is Fiverr, which at the time had a market cap of about $4 billion.
That's right, this online marketplace for freelancers had really fast growth, was founder-led, and had strong financials at the beginning of the year. It's a stock that you owned at the time, I did not. It scored above 80 on your framework and a pretty good 10 on mine.
And yet, while this company was down substantially in 2021, it just continued to go down further in 2022 with a sickening negative 74% loss. It was a rough year for shareholders like me because growth of this company really slowed.
So if you add all of our percentages together, you see that we came out pretty close with both of us losing roughly 50% of the money that we would have invested in those 5 stocks.
Yeah, Brian, it was a brutal year for growth-focused investors like us, so we had to stomach some sickening returns, both in this contest and with our portfolios in real life.
Now, despite that, there were some people who did a great job in the contest, and we want to call out 2022's winner of the contest and winner of $1,000, James On, whose 5 Horsemen of Wealth portfolio performed the best.
So let's quickly review the picks that James made that beat our portfolio. His first pick was Palantir Technologies, which had a rough 2022, falling 61%.
His second pick of NVIDIA, usually a very solid play, had a rough year as well, down 46% and losing to the market.
His third pick was Bumble, the online dating app, also didn't have a great 2022, falling 33% and underperforming the market.
When we get to his fourth pick of Intuitive Surgical, a medical device surgical company, we see that it is at least meeting the market from the date that James made his picks, down about 18%.
So how on earth did he win the contest? Well, that's because his fifth pick, Transmedic Group, ticker symbol TMDX, had a stellar 2022, up a jaw-dropping 255%, which just goes to show that in investing, all you need is one mega winner to do very well as an investor.
So congratulations to James. You'll be getting $1,000 from StockGuard for winning this year's contest.
But we do want to call out a couple other people who had portfolios that did quite well in 2022.
For instance, John's Leverage Up portfolio had 5 picks made in July, and 4 out of 5 of those were beating the market.
Or how about Joan, whose portfolio had 3 out of her 5 picks beat the market? Very impressive.
And finally, a shout out to Ryan, who made his picks at the end of May, and again, 3 out of 5 of those picks were beating the market.
Well, we hope you enjoyed this contest. Thank you everyone so much for playing, and thank you to StockCard.io for sponsoring today's video. We're all hoping that 2023 is a better year for investors. See you in the next video. Brian's out.